on a company basis, you're in talks with 25 companies to get them to invest in driftwood. Are any of those companies partners still Chinese, and does this change the game?
Yes, there are some Chinese companies in the mix, and you can note that there is a lot of enthusiasm in the last few months. But there is a small piece of the total universe, so it's not a big deal.
So why? I mean, why would Chinese companies still want to sign a long-term contract? Why wouldn't you go more towards European companies, for example, like Cheniere just did?
Well, fundamentally, the Chinese need the gas, and they're going to continue to increase the demand for gas for the foreseeable future. If anything, in spite of all the news and all the hoopla about Chinese demand, it's probably still understated given the massive amount of gas they're going to need on a long-term basis. So they really don't have much of a choice. They're playing this silly political game where they're going to put some tariffs on Chinese consumption of LNG, supposedly, but that only affects their customers. It is only going to make LNG more expensive in China. It changes absolutely nothing to the rest of the world.
But longer term, you know, we're looking at the second wave of LNG projects, of which Tellurian is part of. Is it possible, though, that China will now funnel more money into projects, say, in Qatar or Canada or Russia or Australia to secure longer-term supplies from different countries?
I think if they could, they would, but there is not enough gas, and the next wave of natural gas that is going to come on the global market is going to come from the U.S. Fundamentally, you can't change that. We have the cheapest gas on a global basis, with only a couple of places around the world that can compete with us, Russia and Qatar in particular, but for finite amounts. So if you look at the project that I consider very interesting, outside of Qatar, which is kind of a province of the Qataris, it's very hard to get invited down there. But what they've done in Yamal with Novatek is remarkable. So if you add our project at Driftwood and the next project for Novatek, that would represent the increase in demand for 1 year. So it's not enough. They're going to need to address it a lot more, and the U.S. is fortunate to be in a very, very competitive position where we have a tremendous amount of gas. We can put it on the water cheaper than anybody else. I think last week, one of the executives at Shell said that from now on, for future projects, the benchmark is the U.S. Gulf Coast. Given what's happening in the Permian Basin, given what we already have in the Eagle Ford, and given the gas that is coming from the Utica and the Marcellus very cheaply down to the Gulf Coast. So we have a massive advantage there. We have very, very cheap gas, and we know how to build liquefaction very cheaply. That's not going to change. Chinese demand for natural gas is going to continue to increase. That is not going to change. They're only 10% of the market, so they can do whatever they want. They're not going to impact the global market.
So Charif, I hear what you're saying. The Chinese need the gas. We have the gas. We have a natural advantage, as it were. I want to just press you a little bit, though. Over time, if this dispute with China lasts over time, as some people are saying, it could be years, actually, could there be other workarounds? On the margin, could there be other changes to the supply lines? I talked to Kevin Rudd, the former Prime Minister of Australia, yesterday, and he addressed this and said that there could be real disruptions. Listen to what he said.
If the measures are now being embraced by China and the United States begin to affect radically global supply chains, then it is potentially disruptive. Often the United States, it's judged, for example, that China has a limited policy arsenal for a very simple, practical reason. China currently exports $500 billion per year to the United States. The United States currently exports about $140 billion, $150 billion to China. Therefore, whatever measures the Chinese impose on American exports is not going to match quantitatively the impact that American measures on Chinese exports to the United States.
And Charif, then Prime Minister Rudd went on to say, but there are other things besides tariffs that China can do. Do you think that LNG is just outside of that normal equation where there could be supply line changes over time?
No, of course there are some impacts. The first that people don't talk about now is that since it is our view that we're going to have massive investments in the United States to continue to develop the infrastructure. If you didn't have this ruckus, you would have had several Chinese companies making significant investments in the United States to build the infrastructure, build the pipelines, and build the liquefaction to get access to this cheap gas. That is no longer happening before we ever talked about tariff, mostly because the Chinese investors are concerned about CFIUS, are concerned about being allowed to make the investments, do not want to be embarrassed. So they had already started backing off in terms of the investment, and that already has some impact. Tariffs is not the right way to go about it. That's not going to change anything.
So, Charif,
the fact that they're not going to invest is going to change some things, but there's plenty of money in the world today, so it's not going to be a deterrent.
Charif, what I find interesting is the longer-term impact in terms of how LNG is being bought. If you take a look at the length of contracts that we're seeing, as we go forward, we're seeing shorter and shorter contracts. You can see less 11 to 20-year contracts and more 1 to 4-year contracts. That, in essence, is going to become a spot market. The spot market will be very sensitive to extra tariffs from China. How do you think about that portion of the investment thesis?
Well, Alex, I completely agree with you that the LNG market is becoming commoditized, and therefore you're going to have a global price that will be fairly transparent and that people can make a decision with in terms of does it make any sense to build some additional infrastructure or not. And for the last 12 months, the signal has been unmistakable. You have $3 gas prices or less in the United States, and you now have $13 in Asia and $10 in Europe for next summer. The signal is there. We need to have additional capacity to build liquefaction for everywhere, not just for China. And it's not happening. The contracts that I've heard about, that I've read about in the last 6 months have all been, in my mind, on the market. It's coming from companies that can actually afford to take some of their portfolio and sell it at very discounted price and convince people to buy it. And I suppose they're doing this as a loss leader. But you're not finding a sufficient amount of contract to support a new facility. Cheniere has signed a few, but Cheniere has a portfolio, and they're already very solid. And the rest is really not very convincing. So what I'm looking at is really a commodity market very similar to any other commodity. When you have a gold mine or a copper mine, you don't think of a 20-year contract to support it. You think simply, here's the world price, here's my cost to build the infrastructure, do I want to take the risk or not?